Good morning, friends. Um, this video is for all the future billionaires that are listening right now. And if you can listen this video for a video till the end, then there is a 50 percentage or more than 60 percentage of probability that you might become a billionaire. And I am going to intentionally make this video a long video, and it is the test that you have to pass so that you become a billionaire. Because I believe that a person who has an attention span enough that he is not affected by the attack of social media is the eligible one to become a billionaire. See, you are getting exposed to social media, and you are addicted to the reels and short videos, that your attention span has completely diminished. Your brain is unable to focus upon something for a longer time. And if that much amount of wealth comes to a person whose brain is not having enough attention span, then he'll do wrong things, and the wealth will be utilized for wrong things. So I am intentionally making this video a long video so that the right people become rich and right things happen in the future. So let's start the story. I will begin with the Great Depression that happened during 1930 in USA. So before 1930, the stock markets in USA were like really good. Uh, it was almost similar to what is happening right now in India. Like there were like lot of great managers, great sellers of stocks and investment opportunities. Like similar, like what happens right now. You are consistently getting calls from the sellers who are asking you to invest in mutual funds, stock markets, and life insurance. So similarly in US during 1900 to 1920, there was a huge marketing and marketing that led people to invest in shares of the companies. And they when they tasted a amount of lighter amount of profit, banks were lending people money to buy shares, and people used to stock markets give them lot of margin is something like the money given by the stock market to the people. So if you invest 1,000 rupees, you can buy shares worth 10,000 rupees. So they were getting enough margin. So initially, like people used to invest 1,000, put 1,000 in their demat, and they used to get around 10,000 rupees. And using that 10,000 rupees, they used to buy shares. So that's the and that when they see a slight growth, that created a greed inside them. Like, I'm getting more money, I'm getting more money. And the human mentality, right? Like without doing any effort, if you're getting money, it forces you to put more money into it. And many of the people put their complete household savings into shares, and they took the margin, and then they uh, bought shares. Many of them took loans from the banks, and they used that money to buy shares. And many of them sold their houses. pledged their houses, got the money, and then they put that into shares. So like that, the greed. There was a lot of greed in U.S. economy that I'm getting money, I'm getting money, my assets are becoming higher, 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 higher. So I'll become a billionaire at some point. So I'll put more money like that. And around 1929, 1930, USA was US share market was so higher. The share prices were so inflated that a small mistake can bring down uh, the stock market into share prices to fall. And nobody was expecting a fall because they have not experienced the share market fall. What is exactly happening in India right now? Like, India has not seen such a crash till now from its origin. So, and I think, like, what I think it's like a, now India, I mean, now whatever had happened in US is happening right now in India. It's kind of a parallel evolution. So US has not seen a crash before, and then the crash happened, and now Indians have not seen the crash till now. So they never believe that there will be a crash and their shares are going to go null, and then the country is going to be stagnant for next 10 years. So this is not at all like, Indians have never seen such scenario, and so nobody is going to sell. And so this is a parallel thing that is happening. And if you don't believe in my words, look into what happened and what were the causes of Great Depression 1930 in USA. Now, and when the crash happened, I mean, like, the bigger players know that there is going to be a crash, right? So they already sold their shares when it was in higher valuation. They had the cash with them. They kept the cash with them, and when the market crashed, and when the economy was completely when the market crashed, like, see, if you pledge your house and bought shares of it, and the shares become nothing, you are done. Your house is gone. Majority of the loans are for buying shares. So all the loans provided are also gone. So the banks are, like, now completely down. There is no money in the banks. And since there is no money in the banks, there is no money in the economy, there is no banks are unable to give loans further. So there is no money in the economy, and if there is no money in the economy, there is no job. And if there is no job, then, nobody is buying things. So nobody is going to start a new business, because everyone knows that the business is going to fail because there is no customer. So nobody was confident enough to start a business. And imagine that situation where, like, you need food, clothing, and everything, but there is no means to do it. That will create a great depression inside you, right? And that great depression was there inside all the citizens of USA at that time. Whatever dollar they had was nothing. They were unable to use it. They don't know what to do at that point. And India has not seen that level of depression, and Indians will not believe until it happens. Uh, so that is another story. So the rich people who cashed out when the market was high, and then they were having enough cash, and I don't know whether it was in gold or cash. They have liquidated their shares. Meaning, they have sold their shares and have converted it into cash or gold, and they kept that cash or gold with them. Then they waited for the crash, and once the crash happened, the government was forced to print bonds. bond uh, is a promissory note. Like US government, it's a letter where US government is promising you that US government will pay back the amount that you lend to US after 20 years or 30 years. It depends on the period of the bond. So after 20 years or 30 years. And US government will pay interest. Interest every year for the money that you lend to US. So US government was begging the wealthy people, and obviously the interest that US government should put must be greater than the interest that the bank gives, right? Otherwise, wealthy people will be like, why should I give the government? I'll put it in the bank because bank is willing to give me higher interest. So they got uh, interest rates worth 12 percentage to 15 percentage for the bonds during that time, and they kept the money. They lent. They paid US. I think almost 30 trillion. 30 trillion amount and some money, and the wealthy people were getting it. Was the safest asset, right? Like until US government pays off, the US government is going to pay some interest. And with the money that they got, with the money that the US got, US was again, bringing up the economy back. So it's as if, the economy got life. But the most interesting thing that happened was, now the rich people got to know a way to make money, right? If we can destroy the economy, bring the economy down, and then force the government to print bonds which have higher interest rates, and that time the currency of the country will also be very low. So if you have enough money, you can buy bonds with cheap currency and bring up the economy. Once the economy is coming up, the currency value also increases, so automatically the value of their wealth is increasing. They bought these bonds around uh, when the US dollar was around 20, right? 20 INR. Now the US dollar is worth 90 INR. So they already got 400 percentage returns from the amount they have invested during that time. And then they are getting every year almost now the US bond yield is around 5 percentage, but initially it was 10 to 12 percentage. So they were getting the interest as well. And you can pledge these bonds, and then you can get the money for your business as well. So this was a good things for the investor, and then they learned how to destroy. I mean, then they learned that destroying the economy is better to create wealth. And already, see, once if a person start borrowing money, then that person will continue borrowing forever, right? So US government borrowed money. US government was nothing. They borrowed enough money, and then they started building up their economy. So the US government was under the control of a particular group of wealthy people, and that group of wealthy people, see, after 20 years from 1930, again the US government is forced to pay that much trillion. But the US does not have enough money. So what did the US government did? They issued new bonds worth 20 trillion, and new investors came in, and US government paid money back to the old investors. And some of the investors are like, we are not going to give us that bond. We don't need cash. Give us new bonds. So like all the people who bought bonds, we can call them as speculators, or they helped. So but just give the name as the rich people. And this cycle is continuing forever, because they know that the US dollar is going to go higher, so they don't want to encash the dollar right now. So it continued till 2025. And around 2000, it actually, the issue started when there was issues with Iran. Like when Iran was doing a lot of bad things, that time the US government. And since so this is how like the US government work. Like every 20 years or 30 years, they issue new bond, and then they pay the interest. So the US government just need to collect tax enough to pay the interest, and they can use that 20 trillion forever. So this was how the government worked. And then the debt increased to almost, now it is around 38 trillion, double. And the interest also increased more. So that is another story. And the investors who had invested in the bonds during that time were like completely Western people. Now the investors who are investing in those bonds are a mixed. Like it's, if you see the proportion, almost Japan have 1.15 trillion, UK invested almost 1 trillion, China 750 billion, Europe almost 450 billion, and other major investors other major investors 5 trillion. And this Cayman Island people are the ones who had initially invested when there was crisis in 1930. And the Swiss is the Switzerland is also not specified. So out of 38 trillion, almost, see, if you calculate the overall, almost only 8 trillion is around external. Rest 30 trillion is from Cayman Islands and Switzerland. So what kind of money is there in Swiss bank. Majority of the Swiss bank money is coming from wrong people, politicians, black money, like that. So all the illegal funds are being invested there in US bonds, which are the most secure thing. And 1930s, like Cayman Islands, those are like the rich elite people who helped USA during that time. So they just renewed it. So that is how the total debt is being distributed right now. So around 2010, when the Iran was against USA, that time US put certain sanctions. And what I'll explain the sanctions for you. So majority, like, since US dollar was so powerful, 60% of the global trade happened in US dollar. And the transactions to execute the trade was happening through Swift. It was a network of communication that was used by the banks and to transfer funds. So bank A in UK will tell the bank B in China that we receive the customer have received the goods, and the customer is going to pay money. So bank A will send a message that we are going to pay you this money, and this money is supposed to be uh, deposited to the customer of your bank. So this is how the global trade happened. So, and for global trade, all there should be banks in different countries, and then banks need to be connected via some network so that they can communicate. And the communication network was built by a company called as Swift. And since majority of the global transaction happened through US dollar, USA has major control in the Swift communication. So USA told that now Iran and the business that happened, that Iranian rich guys does, will not be supported by the Swift communication. It's as if, you know, if you want to do business, you have to use Swift. And if US ban Iran from using Swift, it is as if, Iran is separated from the globe. Now they cannot, the global market is not available for Iran. That time, Iran was completely affected. Their economy went into trouble, and a lot of people become unemployed. A lot of hate happened, and then the terrorists used those hate to create terrorist groups, and it changed the political landscape of Iran. It increased a lot of other issues, and not moving to that. So because of that, but Iran, they see, they are also human beings, and they are also having brains. So they were like trying to do trades via gold, via other currencies. So US dollar dependence was becoming lesser from 2010, but it was not affecting because 90% of the globe was trading in US dollar. So US dollar was high, and so the investors are also like renewing the bonds, and the government is in a safe place not to pay back the debt because the demand for the bond was higher. Gradually, what happened, then Crimea issue came, like Russia attacked Crimea, and during that time, US government put a sanction on Russia from not using the Swift. So that time, Russia was majorly trading uh, using other currency and was not using the dollar. Now the issue is Russia is a bigger economy, and Russia is a producer. And since if Russians are not using Swift, it's as if, the Swift cut off 30% of their customers. So now when Russia started using other currencies like Ethereum, for trading in uh, they were trading in yen, they were trading in Chinese currency, then they were trading using gold, they were using INR. So during that time, the US dollar demand went down, but still there was like US dominance. And petrodollar system was also there, like the petroleum. If you buy petrol, you have to use dollars. So, and since America was the major consumer, all the countries were accepting petrodollar system, so the dollar was in demand. And but now, like, since people are moving to other systems, so this petrodollar uh, system is also affecting a problem right now, because now people are using EV, and there is a less demand for petroleum, and gradually if there is less demand for plastic, that will also affect the petroleum demands. And when there is a less demand for petrol, automatically the dollar requirement to buy petrol also decreases, so that will also affect the dollar value. But now all the countries, when and then again during 2022, during the Ukraine war, Russia Ukraine war, that time, uh, when Russia was completely banned from using the Swift system, that time the Swift majority of the countries got a fear that USA can bring in sanctions. And even Trump was annoying China. Trump was bringing in ban against China. So China also China also got scared that now they will they also have US can ban them as well. So then gradually all the other nations started accumulating gold, and that is the reason why the gold prices have gone higher. And if you want the proof, just search for ISSEU USD and you will in trading view, or just search for gold price charts. So you will know how drastically the gold price increased after 2022. Exactly, so 2022 was a very crucial time. And during corona also, China was banned, so major producers like China and Russia got a fear of them getting excluded from Swift, and they started creating a new transfer system, and I think it's called as CCIP. China is having a networks of banks where you can execute trades through Chinese banking system, and they are not using their currency; they are using gold-backed system. Uh, so and almost the dollar dependency of the world, and since majority of the trades are now shifting, the dollar dependency on trades have decreased almost from 70 percentage to 50 percentage. So the demand for dollar had decreased from 70 percentage to 50 percentage, but the dollar value is not decreased. Uh, since this is, I think I need to show you this part. See, this is these issues actually should trigger these issues should trigger the dollar to fall, but the dollar did not fall, because if the dollar fall, I mean, like, it's as if, it's kind of the whole world was addicted to US dollar, and they was feeling so safe using US dollar to trade. But when when they got the fear, if they completely, if they announce, all the countries announce, like, now we are not going to use US dollar immediately, then it will affect their trades, because they need years to, gradually shift from dollar, so that the global economy is safe and there is no economic crisis. Because if there is any economic crisis, then these developing countries will not survive. So it took them almost 5 years, almost 15 years to, gradually come out of the issue, like from 2000, if you see from 2000, yeah, from 2009 it fell during Iran issue from 50 to 44, then it went up. 2012 economic crisis did not affected. 2015 some other issue, it fell. And yeah, and 2012 was Crimea, I guess. Crimea. 2012 or 2015 was Crimea. Then 2019, another economic issue. 2020, Corona, and that time they banned China, and that affected again. And now it's almost 2025. So by this time, they have, I mean, like other countries have reduced the use of US dollars, and US dollar is now at the peak, almost 90 rupees. So they have reduced the use of uh, use of using US dollars for their trade. Now if the dollar falls, what all things will happen? So this is one story. Now I'll go to the story of Japan. So if you see, so since the after Hiroshima Nagasaki, uh, so after Hiroshima Nagasaki issues, like Japan was so afraid, and Japan wanted to avoid further nuclear attack and everything, and they wanted to feel safe. So if you want to feel safe, you should be with the country which is stronger. So the Japan mm, decided to be with the US. And how to please the US? You can please US. Japan pleased US by lending US uh, money for very cheap interest, like interest rate of 0.5 percentage, like that. And and they were lending that money for 30 years. Now it's almost 30 trillion worth of debt that Japan owes to US, and some of it, 1 trillion is for 1 trillion is to the government, and majority of them are to the funds. And with that fund that is being, pumped, or that is being taken from Japan, majority of the mutual funds have invested in share markets. And during the Corona period, they got another amount from quantitative easing. So you can search in the internet what is quantitative easing. It's like printing of money by the government. So both money taken borrowed from the Japanese banks, and the money that the governments got from the quantitative easing, both the capital were invested, or were poured into the stock markets. And uh, stock markets of global economy, stock markets all around the world, and using these funds, they have inflated all the stock markets. Now and Japanese economy was going in a very good way. Now the issue is, their currency is so depreciated because of that, because they were printing money and then they were lending it to the world. So So they were printing money and then they were lending it to the world. So if you print a lot of money, then automatically your currency will fall. And if you see the fall, I'll put it in years and you'll see how much it is depreciated. It was around 0.013 in 2012 and it almost fell half, 0.06. So half. And Japan's currency has devalued to 1980s time. So now for the Japan to protect its currency, Japan has to increase the interest rates. So if Japan increase the interest rates, then that is how, because like Japan till now, people borrow Japanese yen, then they sell Japanese yen and buy dollars and invest in dollars. Now Japan wanted the world to buy Japanese yen. So Japan is increasing the interest rates. So if Japan increase the interest rate, say 10%, the world has to pay back Japan 3 trillion rupees, 3 trillion yen. So all the people who have borrowed from Japanese bank will have to pay some interest. And what they have used that money for, like 1930s, people borrowing money and using it to buy shares. All the major mutual funds borrowed money from Japanese banks and they have invested it in share markets. And now they have inflated the share price very high. And now the Japan is going to increase the interest rate. So since if Japanese yen increased, automatically the dollar will fall. So there is a loss if they are still keeping the dollar with them, and that loss plus the interest rate. So say if Japanese yen increase by 5%, the dollar will also fall by 5%. So they have to pay 5% again. So that will be another um, 1.5 trillion. So it will be 4.5 trillion. And if the big players start selling dollars and buying yen, automatically that will again decrease the dollars. So if there is no good dollar value, then uh, investors will not buy US bond. So US government will be forced to pay 10 times the money that they collect right now from their taxpayers, which is impossible. So 90% of the investors' wealth upon the global market will be diminished, which is a great threat to the big investors. And these investors are very powerful people because their investments come from Cayman Islands and Switzerland. So you know what kind of investors I'm talking about. So they will not, either it's like they have already, we don't know we don't know what is their plan and what is there in their mind. Anyways, so if yen increased a little bit, it is going to affect the global market. Point one. Demand for US dollar is already diminished to 50% because 50%, almost 30% of trades are happening in other currencies compared to 2010. And because of the quantitative easing and from money borrowed are into share markets, majority of the funds are being deposited in share markets, and the share markets are so inflated. And the most crucial part, and so you'll tell like there are a lot of bank managers, lot of central government bankers, lot of financial analysts who will help US government to take measures and then sustain the global market. That is true. See, if I know all these kind of things, then the US government bankers also know all these kind of things, and they are going to um, they will try to keep up the US dollar demand. And only US wanted that. Other countries, rich people wanted, or other countries bankers want their currency to be in circulation, and then they also wanted the US dollar dominance to come down. So, and they have achieved almost 30 percentage of their goal, but still the US dollar is very high. So I think the US dollar value is highly inflated right now. And majority of Indian IT growth comes now coming to. So this is the story. And I don't and so coming to India, because I mean, like, people have to figure out like what happens when dollar falls. So how it affects India is majority of the Indian growth happened because of export, and export happens through US dollar. And then IT sector, there were like lot of IT jobs, and that IT jobs created a lot of IT employees, and IT employees bought home, and that is how real estate market in India boomed. IT employees bought car, IT employees bought gadgets, IT employees build. So, and then if you bought home, if you build gadgets, if you build cities, IT parks, and that IT parks created other businesses, because these employees need school, these employees need spa, these employees need shop, supermarkets, and the owners of supermarkets started buying cars, and that is how the whole economy was built after the after independence. So, and we were also manufacturing then, and we were also exporting. We were exporting in US dollars. So if the dollar value falls, there will be an increase in the price of things uh, in USA. And if there is a increase in price of things in USA, then they will not be encouraged to import things to USA. They will start producing things in USA. And if they start producing things in USA, it will generate job, and if it generates a lot of jobs, then it's good for the politicians or the Congress in USA to fund to win their elections and then control the US people. So it's a win situation for US government if USA's reduce the imports and start producing in their country. And if but the issue is like we cannot sell things that is being produced over here, and we will not get the profit from our export business. So Indian export businesses are going to get hit. And how are we going to export things? We are going to export things via port. So majority of the port revenue is also going to go down if the US dollar falls. And I am not saying the name, which company owns the major ports. So, and if there is a small hit in that company's port business, it affects other businesses as well. So let's see what that owner is going to do to stop these things. And the majority of Indians have invested majority of money in that business as well. So if his business falls, automatically the share price of that company falls and people will lose some money out of it. uh, I'm not moving into the depths of that story. So that is one thing. So if Indian export falls, automatically there will be some unemployment because of in because of the job because of the export industry failure. And if US dollar falls, USA created a lot of IT companies in India because Indians were cheap labors. But because of the growth in Indian economy and inflation or rise in price for Indian products, Indian laborers are asking for higher wages, and Indian IT sector becomes so IT labor wage becomes so inflated that now, like in 2010, if uh, inflated, but since US dollar was also rising, they were okay with it. They were willing to pay the labor higher price because the US dollar value is also increasing. But the moment when US dollar value goes down, that time uh, the MNCs will be forced to pay higher wages to the Indian IT employees and in dollars. And if and IT Indian IT employees are going to be so expensive, so the foreign companies will not invest in Indian IT firms. And if foreign companies are not investing in Indian IT firms, there will be a massive unemployment in Indian IT sector. And if there is a massive unemployment in Indian IT sector, then majority of the Indian IT employees have loans. All the loan goes into defaults, and it will affect the banks. They will not buy houses. It will affect the realty sector. They will not buy medicines. They will sell their houses. It will reduce the Indian asset prices. That will again affect the realty sector. They will not buy petrol, they will not buy anything, and it will affect other industries. And the sales and profit of other industries fall. And if the sales and profit of other industries fall, those industry will fire employees. And it will again say, if there are 5 lakh employees, that unemployment of 5 lakh employees will trigger another unemployment of 25 lakh employees. And unemployment of 30 lakh employees will trigger unemployment of 1.5 crore employees. So the unemployment disease will spread. And when the unemployment disease spreads, uh, these employees are funding. I mean, so within when the dollar falls, there is going to be a massive unemployment. If there is a massive unemployment, now the Indian share market is sustaining based on the SIP money that is being provided by the uh, Indian employees. And the moment when there is unemployment in India, automatically the share prices will also start falling because there is no buyers, and the rich people already know it, so they have taken their money, and the share market will collapse faster. Majority of the mutual fund companies, health insurance companies, and other uh, insurance companies have invested their money in the share markets, Indian share markets. So when the share market fall, um, I think around 30 to 40 percentage wealth of each Indian citizens are into shares. That will trigger uh, that will wipe out almost 20 to 30 percentage of the amount of money that the Indian species have earned in their lifetime, and unemployment will reduce the asset prices to almost 50 percentage, so almost 70 percentage of the net uh, value of money that we have earned from 1950s will be vanished. So it will bring India into a very poor state, very underdeveloped state. And see, this is a well-versed country like India. So imagine the situation of other countries: Sri Lanka, Nepal, Pakistan, Afghanistan. All of them will be like going into ashes. And the fear of this made the bankers to shift to other systems, and majority of the trades to other currencies. So US dollar is going to fall, and to reduce the impact, they have reduced the dependence, and they are accumulating a lot of gold. So this is the story, and this is how it is going to roll out. So beware of. Now think yourself, research upon these topics, put yourself how your business is going to affect out of this, and find solution to protect yourself from the collapse. uh, so see, these stories are all known to the bankers and majority of the fund managers all over the world, right? So what really rich people want? So almost $20 trillion invested in US bond should not. See, if the $20 trillion, which is of uh, 20 into 80, that is like 160, 1600 trillion INR. If dollar fall from 90 to 50, 45, 1600 trillion INR become 800 trillion INR. So uh, there will be a loss of 800 lakh crore to the people putting their money in Swiss accounts and Cayman Islands. So let's become dumb and let's see. In their point of view, they are going to have a devaluation, right? So say let's assume if they have kept 800 trillion in these accounts, obviously they would have somehow in 15 years migrated their fund to other countries, and they would have started investing in them. Still there is some money in the treasuries and some of the public money. Obviously that is what they do, right? When they know that the value is so high, then they dump that thing upon the innocent people, and then they start investing in cheaper things. Well, the focus of innocent people are not there, so they know that thing. Now, uh, so let's assume that they would have, see, if they have done a lot of marketing and if they would have um, brought up the share markets via quantitative easing and money borrowed from Japanese banks, then they would have all since the markets are so high, they would have taken the money in the form of, they would have withdrawn their funds, and they would have almost sold majority of the US dollars, and I think they will be sitting in gold or in other currencies that we don't know which is going to go, which valuation is going to go up. We never know that. Now, so for them, the global economy has to crash, and since they have tasted the amount of returns that they get from the crash of global economy, because if the global economy crashes, all the countries will issue bonds with higher interest rates and safer havens, so then they can put their fund into those bonds and again control the whole world. So now they are waiting for the global economy to crash. But how can you bring down the global economy? Bringing down the global economy is very tedious. Uh, it's very tedious because all the, say, if US dollar falls, then the gold price will go up. So all the central bankers have accumulated enough gold in their treasury to reduce the fall. Because if US dollar started falling, the banks will sell gold and buy dollar, so that they can reduce the momentum with which the US dollar falls. And if there's less momentum, then the economy will also decay in lesser way, and they can reduce the rate of the recession. But the other side, the speculators who wanted this economy to fall, can are thinking in a different way. So what they have done is they have increased our dependence upon electronic gadgets. So now they have made the whole world to use electronic gadgets, and we are now addicted to electronic gadgets, and that is the major reasons. And all these electronic gadgets have silver in it, and lot of silver, like any electronic gadgets with PCB board and circuit have silver, because silver is the best conductor, and that increases the speed of that electronic gadget. So, but the silver price was constant, was ranging from $0 to $50 from the beginning. It never went up above $50. But uh, this silver is being used in electronic boards. This is used in electric vehicles. It is used in solar panels. It is used in defense technology. It is used in medical therapies. So this silver is so valuable, and they have increased the dependence of people upon silver. And now the issue is they have increased the dependence upon silver, but the central bankers were not accumulating or hoarding silver, because they were not seeing this angle of things. Like majorly, the silver is generated in Russia, China, Poland, Prague, like that. So, um, and so I think This so now the world is dependent upon silver, and for the world to grow further, you need silver. Basically, uh, the IT, artificial intelligence, uh, require processors, hardwares that are built upon chips, and that chip is built upon silver. So if if there is no silver, then there is no AI. And interestingly, majority of the US investment is upon artificial intelligence. The Nasdaq, like majority of the US investment uh, is on Nasdaq, and Nasdaq is comprising of artificial intelligence company, and Nasdaq uh, and these AI companies require silver. So if there is an increase in silver prices, automatically there's an issue. I mean, like, there will be an increase in the gadget prices, and if there is an increase in gadget prices, and if there is an increase in the cost for the hardware requirement of artificial intelligence, the artificial intelligence companies will face issues. And if AI companies started facing issues, then the AI sector is going to fall. And if AI sector falls, uh, US stock market will fall. If the US stock market falls, that is a mother market, all other market will fall, and that will wipe out all the global share markets. So if US share market fall, then the effort or the value that is being invested in the share markets will become nothing. And if this AI company falls, then all the IT works that the manufacturing companies, IT support that the manufacturing companies used to get become so expensive, and it affects their funding and their profit, and all the automation requires IT. So their fundings, their profit will also go down. That will also trigger unemployment. So now, if silver price increased a slight higher, it will affect AI and IT, and that will affect US stock market. And IT employees are also shareholders, so it will affect IT shares of other countries, unemployment in IT sectors in other countries, and that unemployment will spread, further unemployment in all over the world. And if there is complete unemployment all over the world, then the whole world is going to go into a depression. It's not US depression, it's global depression that the humanity have not seen yet. And since the central bankers have not given their focus upon silver, and the speculators or the investors from Cayman and Swiss banks know this thing, they are going to increase the price of silver. And the moment the price of silver increase, it is the beginning of global depression. And it will give rise to a new form. When the global depression happens, again what happened in USA will happen all over the world. All the governments will be under the control of the wealthy rich people, who will then lend money to different countries. And if that happens, and if the whole world is under the capitalism, then it's very difficult. Then the whole globe is under the grip of dirty capitalism, and we will be we all the middle class and poor people will be under scrutiny. All the middle class will get screwed. So so now this is the challenge for you, and I have indirectly told you, like I have indirectly told you how they are going to bring global recession. So you know what to do to protect yourself from global recession if you're smart enough. So be smart and at least join the future people who are future capitalists who are going to control the world. Thank you.